Hey people, the autumn budget has just dropped within the UK, and I thought it'd be a great idea to talk about how it affects contractors specifically within the UK. And I guess the big question is, how does it impact us? What does that specifically look like? And so in today's video, what I really want to be talking about is how these updates affect contractors. What does it look like in terms of things like national insurance contributions, capital gains, all of these different things there. So I'm going to break it down for you and get into it. And of course, as always, it's really important to make sure that you like and subscribe. And if you want to see more videos centered around this stuff, that would be awesome. So for those of you who don't know who I am, my name is Michael Tabirade. I'm an independent management consultant and founder of the consultancy Mastery Group Limited. So let's get into it. So of course, the autumn budget has dropped. Okay, what does this really mean? Basically, this is an opportunity for the government to really be talking about all of the changes from an economic standpoint that is going to affect the country. And it's a pretty big deal because last time we saw the things that happened with Liz Truss and Kwasi Kwarteng, and we all knew that was a disaster for many, especially for them in terms of what it meant for the UK. But what does it mean for contractors? That is the big question. So the way I'm going to do this is I'm going to be talking about what's going up, what's going down, what's remaining the same, so that you have a bit of an idea of how it really affects you. So let's start with what's going up. So the first thing to state is that employer national insurance contributions is going up. Now basically it highlights the fact that employer national contributions were 13.8% and are going up to 15%. So that's a 1.2% increase. What does this really mean? Well, what are employer national insurance contributions? What are national insurance contributions anyway? National insurance contributions really relate to money that is used for public services within the UK. So think about your NHS England, prisons, things related to energy, etc., etc. All these things that contribute to public ways of working or the civil service or whatever it may be. And so it's an important factor when it comes to raising money for the UK. And so really what they're saying here is that when it comes to the contributions that organizations are making, they're going to be contributing more. And so it's quite interesting because, I think Rachel Reeves was talking about how, we're not going to be affecting the working person. Okay, we'll talk more about that in a bit. But it means your organizations are going to be affected. And of course, they're not going to want to take all of the buck or the bill. They're going to find ways to divert that, I'm sure, in many different unique ways. And so we have to think about how this is going to affect different individuals. And so this is going to come into play from April 2025. And it really means that there are going to be some changes in terms of employment allowance. What do I mean by this? Well, before there was a situation where the threshold was at £5,000, where there was a bit of an allowance for organizations, especially SMEs. But essentially what's happening is that this is not going to be the case anymore because it was £5,000 employer national insurance contributions allowance for those organizations that were making up to £100,000. Now what they're saying is they're raising the threshold to £10,500 and they're removing the £100,000 threshold for those SMEs. What that really means, if we think about it, is organizations, regardless of how much they make, will only get an allowance of £10,500 and they will be expected to pay that specific 15% NIC regardless of how much money you make. So it means, the way I see it, at least anyway, the government's going to be making more money from these organizations. So that's the interesting thing to note. Now, what does this specifically mean? I think this means for contractors that whether you're inside or outside, there's going to be something said about rates. Okay, rates may change because if organizations have to contribute more money towards, again, paying their staff or paying consultants or contractors, they're going to want to find ways to divert those funds. So that may be in the form of efficiency savings. And as we know, for those of you who watch the budget, every government department is expected to make 2% efficiency savings within their space. So this may be another way in which they can do that. And of course, we already know that the government has made a pledge to halve the consultancy spend across the UK in order to save monies. I think it was something like 200 or 300 million or something like that was contributed towards consultancy cost. So for those of you who are inside of IR35, who pay national insurance contributions as part of PAYE in accordance to HMRC rules, this may mean that your rates may be affected in terms of what is negotiated. What do I mean? If national insurance contributions, the employer ones, are paid on top of your gross pay or the advertised rate, it may be a situation where in order to make sure that they have savings, they may lower the rate that is applicable to you. So let's say, for example, you expect £500 a day. The hiring manager or the client for that organization may want to push £450 or £400 a day instead of the full £500. What does this mean for those who are outside of IR35? Well, it really comes down to whether you pay yourself via a salary or dividends. What's the difference? So when it comes to a salary, the reason why any outside of IR35 person will do a salary is because there are benefits saying that you work within the UK and you can get pension, and there's all these other stuff, all these different perks that you can get, all these benefits that you can get from the state. That's why somebody would do salary, as an example. Whereas if you do dividends, which is what most consultants do, independent consultants, especially if they're purely by themselves under a limited company, they're literally going to make a record of the transfer of funds from their business account into their personal account, recorded by their accountant, which is paid as a dividend, and pay tax on top of that, which is the corporation tax, which is between 19 to 25%, and or dividends as well, dividends tax depending upon your income level, okay, which is all based on income tax, etc., etc. Hopefully this makes sense. Okay, so if this doesn't, slow this video down and try to make sense of it, because yeah, there's a lot to dive into. But the point being made is, I think the people who may win within this space are those individuals who are outside of IR35 and are specifically paying themselves via dividends. If you are not paying yourself via dividends and you're paying yourself via salary, you are probably liable to pay employees' national insurance contributions as well. So double whammy for you guys. So really and truly, it could affect contractors' rates potentially. That's the take-home message here that I would like to basically highlight. So what's the next point I want to talk about? The next point is capital gains tax on property. So what does this mean? This essentially means that the lower rate of capital gains tax will be moved from 10% to 20% and the higher rate from 18% to 24%. Now, capital gains tax is applicable to anyone who's selling off property or anyone who has certain assets when it comes to shares, and as an example, or selling off a business, etc., etc. You basically get the message. So if you are trying to sell anything off, the government are going to make more, double at least in the lower threshold in terms of what is available. So again, they're making more money. Also, the other thing to note is when it comes to stamp duty, especially if you're buying a second home, what is going to happen is that it's moving from 3% to 5%. So let's say, for example, you're getting a property that is worth £500,000, then rather than paying, what is 3% of that? I don't even know. £15,000, it's most likely going to be £30,000. I think I've got that right. Or is it £25,000, should I say? I think that's more accurate. So bearing this all in mind, it's gone up. Okay, this is all to say it's all going up. The next thing is national living wage. So, of course, this is useful for individuals who are dependent upon minimum wage, or for contractors who employ people who are on minimum wage. So it means that you're going to get more support in terms of supplementing those individuals as well. So that's another thing that is going up as well. So the other thing that I want to talk about is also state pension. So for those of you who are aware of the triple lock is effectively a mechanism that talks to the fact that depending on the rise in inflation, or essentially the increase in wage growth, or at least having a minimum of 2.5% as a base percentage, the rate of the pension or pension growth will be dependent upon one of those things based on what is highest. I said that really convoluted, but as you can see here on the screen, this is essentially saying that the triple lock ensures that pension rises with inflation, wage growth, or minimum rate of 2.5%. I've just seen a typo there, but that's all good. But essentially what they're saying is that they will stick with that guarantee. That is not going to change throughout the government, or at least the age of this government, which is for the next 4 years or so. There's also something to note that the working age benefits will also rise by 1.7%, keeping pace with inflation. Now, what does this mean for contractors? Well, look, you know, there's only really pension applicable to contractors if they are inside of IR35 and they have certain benefits with an umbrella. Maybe that's a bit more applicable. But really and truly, when it comes to contractors, they're more likely going to be having a self-invested private pension, especially if they're an independent management consultant, i.e. they're working outside of IR35 and they have their own setup. So it's best to have that in place anyway and not be dependent upon the state. So that's something to bear in mind, irrespective of some of these changes. So if we look at electric vehicle incentives as well, so they're trying to push, obviously, eco-friendly choices. So in the first year, rates for vehicle excise duty will see increased differentials between electric vehicles. So this is really basically saying that they're pushing the incentives to ensure that people purchase electric vehicles, because they're probably trying to make sure that we're more of an eco-friendly society, which is definitely something that is welcomed. Now, let's look at the public services and capital spending. Now, for those of you who are not part of the public sector, there's something known as revenue spend and capital spend. So revenue spend think of them like bills, okay? So you're paying for staff and people, you're paying for electronic services on a continuous basis. It's stuff that you're paying for again and again and again. And what's happening is that the government are focusing on making sure that there is more money for capital spend. So capital spend is more focused on things like infrastructure, buildings, things that you need to initially start something, as opposed to something that is reoccurring. And so the aim around this is to make sure that there is more investment in these things to allow us to have the startup capital to get things going, whether this is like a new hospital, for those of you who know about the new hospital program, etc., etc., etc. And so there are new fiscal rules that have been put in place, which you can read about, which favor capital investment over revenue investment. So that's essentially what's happening. And so there is a huge boost of over 100 billion over the next 5 years in relation to capital investments. So this could be a good thing, this could be a bad thing. It's a different way of looking at things, it's a different way of thinking about investments within the UK. But there may be some grey areas in terms of things that are required to help boost some of this investment. Now, of course, a lot of this stuff is focused heavily on the public sector. Okay, so 40 billion is being raised from taxes, which is a lot of money. You know, we were told that working people are not going to be affected. And I guess they've stuck to that promise to a degree, but indirectly they will be affected. You know, contractors, consultants, permanent members of staff, fixed members of staff, we're working people. But if national insurance contributions are going to increase for employers, then of course they're going to be affected, because employers or organizations are going to make sure that they make savings where they need to. Plus, 2% savings or efficiencies need to be made in relation to public sector organizations anyway. There's also going to be 22 billion that's being pushed into the public sector Department of Health and Social Care. But what I want to make very clear is that it seems as though the push is more centered around health as opposed to social care. So social care is more to do with things like care homes and child services and all these different things there. Whereas when it comes to health, that's more to do with appointments, waiting times, the NHS. Think more in relation to those different things. So 22 billion, that's just over half the amount of money that's being raised through these different tax incentives. And so a lot of money is being pumped into health, education, the justice departments. They're really going to see this increase in real terms over the next 2 years or so. So really important to recognize this stuff. Why am I saying this? This may be an opportunity for you to start looking into these different sectors. Maybe there's an opportunity for you to support, let's say, the justice arena or the health arena or the education arena. And of course, if there are capital investments being put into this stuff, then logically what this means is that there are going to be more projects and programs tailored around setting this stuff up. Whether there'll be the funds for revenue spend, i.e. for staff, etc., is a different story. But again, you know, for consultants and contractors and all these different things there, you know, depending on how they've set up their funds, you're likely to be put into capital spend anyway. So think about what I'm saying. There's opportunity within these spaces for you to capitalize. So look at these different areas. What I haven't put on here is the Great British Energy. They haven't spoken about Great British Energy. So think about how you can contribute to some of these different areas to support you in your career portfolio, career goals. So the other thing to note is that, again, I've spoke about this 2% productivity efficiency stuff, but they're going to launch something known as the Office for Value for Money. Okay. Now, this means they're going hard on making sure that organizations, companies, people are not doing anything crazy. So that means for you, you need to make sure that you are showing value for money. I'm going to talk more about this a bit later on. I think they're making sure that there are, I want to say 4,000 to 5,000 different staff employed for HMRC to ensure that the I's are dotted and the T's are crossed. So the government's not playing. It's a different feel. It's a different feel altogether. So before we continue, my question to you is, what do you think this means for you as a contractor or potential contractor in the UK? Definitely comment below if you can. The other thing I want to highlight is that if you're somebody who is a business leader and looking to build their portfolio career, approaching it like an independent management consultant, then feel free to click on the form below to learn more about how we can work together and really shape your career in such a way where it's able to be flexible and adaptable and profitable in this new era as well. So the next thing I want to talk about is what is going down? What is specifically going down within this space? So one thing to note is that employer national insurance contribution thresholds are going down. So I spoke about this before. What is this? Well, I didn't speak about it, but it basically means here that essentially rather than, paying national insurance contributions as an employer from £9,100, you're going to be paying it from £5,000. Now, for most consultants or contractors, this is not going to be a thing because if you're outside of IR35, you're probably going to be paying yourself dividends, which is basically a recorded bank transfer. Whereas some people who are contractors or consultants in outside IR35 tax codes, they are going to be in a position where they're being salaried. And so really that means that they're going to be paying their national insurance contributions earlier because, of course, it's gone down from £9,100 to £5,000. Just because it's gone down, it doesn't mean it's a good thing, basically. It just means the government is raking more money in. What's next on the agenda? Well, that was the only thing that's going down. So the next thing to talk about is what is the same, what is changing. And to think about this, I was watching another video on this stuff. There's something called fiscal drag, which this guy talks about. And essentially, it's the notion that when you don't change anything, yet income goes up, then you're in a situation where, again, the government is making more money to contribute towards things like PAYE things, pay as you earn, things such as national insurance contributions, which again contribute towards public services, and things like income tax, which, well, sorry, it's the other way around. Income tax contributes to all of that stuff, so public services, etc., etc. Whereas national insurance contributions are really towards insurances such as maternity leave, paternity leave, etc., etc. I don't know what happened there, but we can ignore that. So what is staying the same? Well, corporation tax is capped at 25%, so that's not changing, and they talk quite boldly and proudly about the fact that this is the lowest within the G7. I don't think anyone really cares, but I think this is safe to say that if wages do increase or rates do increase, which I'm not sure if I'm seeing happening unless you're within certain public sector organizations such as the NHS potentially, or education or whatever it may be, then nothing really changes there. And the government will continue to get their 19 to 25%. The other thing to highlight is that VAT and all of those different things there's no change to the basic hire rates as well. Everything remains the same. Fuel duty freeze has also been extended for another year, which should help mitigate some of the rising costs of transport. So again, that's something to think about if you're a contractor who is involved in some of this transport stuff. Another thing to highlight is the fact that when it comes to triple lock, that's not necessarily changing. So none of that stuff is changing at all. So this ensures that, pensions will continue to either rise with inflation, the wage growth, or the minimum base of 2.5%. So whatever is the highest. Of course, I spoke about the incentives for electric vehicles within company car tax are still in place. So, bonus tip, you know me, I like a bit of a bonus to keep you guys engaged, etc., etc. So what can you do? What can you do as a person taking on this information as a consultant, a contractor, all of these different things? What are the practical things that you can do? Well, here are some things to consider. I think there is going to be a lot of focus on things like Department of Health and Social Care, Ministry for Local Government, things like Department of Education, and local government just in general. Money is being pumped into those things, and you can look at the numbers when it comes to this stuff when you read the autumn budget yourself. I think there's about 170 or 168 pages. You have to read all of that stuff, but the first 50 pages at least make for really good reading. Okay. So based on this, I think there's definitely going to be a deep sea of opportunities. So of course there's going to be more money pumped into these areas, but how can they control this money? Of course, we know that it's going to be based on capital investment. So startup costs, think of it as startup costs. And so it may be a thing where actually more money is paid towards contractors or consultants because they realize actually we need these people to help us with these initial setup of these programs. Or it may be a situation where actually, no, they pay these contractors less because maybe there is now some sort of hard line from government to make sure that this happens. It's hard to know. So there'll be a mix of opportunities, but in those different areas, there's definitely going to be opportunities for you to capitalize as a contractor for sure. So I would look at those opportunities just in general, just to see what happens. Now, of course, when thinking about all of this stuff, it may be important to make sure that you are flexible when it comes to your rate. Okay, so maybe you're somebody who gets £500 a day. Maybe you need to start thinking about 475, 450. But I wouldn't do that straight away. I would start thinking to myself specifically, okay, what do I need to, what's the market telling me at the moment? Is the market telling me to change what's happening because I'm not getting the same opportunities as I did before? Or is the market telling me to stay strong and stay firm? So you need to, I can't tell you what to do here. You need to kind of work out what makes sense for you specifically. Now, I believe that there may be more opportunities when it comes to the private sector, because the private sector, is independent of the public sector to a degree. Now, not entirely. And what do I mean by this? Of course, private sector organizations apply for bids and tenders via procurements and all this kind of stuff there. And there are going to be changes to procurement rules, which I'm going to talk about in a bit, which means that, yes, there are some dependencies, but there are some situations where private organizations are more B2C, okay, or B2B with other private companies. And so they don't rely on government as much. Now, with this whole autumn budget, it feels like they want to do things independent of the private sector, but also work with them at the same time. So they're penalizing them, but they're saying, let's work together. It's a bit crazy. So there will be a neat pocket of individuals who are going to benefit from some of this stuff because of the money that's being pumped into these different areas. Contractors are not going away. I'm telling you that right now. They're not going away. There is an opportunity for you to definitely make money as a contractor within this space, but it may be difficult and it may depend upon the skills and competencies and the experience that you have already. Am I saying there's going to be more opportunity? No, not necessarily. I don't have a crystal ball, but it would be good to see what is available from a procurement standpoint and from a market standpoint when it comes to these contracts. I would say the winner out of, let's say, an outside IR35 contractor who's either paying themselves dividends, or the outside IR35 contractor who's paying themselves a salary, or the inside of IR35 contractor under umbrella, in terms of who's the winner, is the one who's paying dividends as the outside IR35 contractor. Why? Because it's more tax efficient, and because I believe there may be more opportunities from a private standpoint to help public sector organizations or other private organizations. That's what I think may happen. We haven't seen many opportunities for outside IR35 contractors in general, because of the way things have been going and because organizations have been scared to, change the status of a contractor because of the penalties that they may incur. But things may change. Okay, so just hold your breath, hold this space. Let's just see what happens. And of course, procurement rules are also changing. I haven't really spoken about that. It's not really an increase, it's more of a change. And what they're trying to do is make sure that there is a more clearer, transparent, and more digitally savvy procurement process, which means that there may be more competition when it comes to tendering for services, but it may mean that you get better information and it's more up to date. Again, check things like, Contract Finder, all these different places to help you find these opportunities. So hopefully that's given you a clear idea. Now, of course, there are other things to account for. So the Office of Value for Money should encourage you to ensure that you demonstrate at least 3 of these things: efficiency, cost saving, and value. Just value in terms of delivery. You should be doing that as a contractor or consultant anyway. So note down when you've made a change. Make sure that you're clear about the money that you saved, or be clear about the efficiencies that you've contributed towards an organization. You have to do that. It's going to be even more important that you record this information because you may be audited. And if you're not audited, the organization that you're working for may be audited. So these are things to think about when it comes to this new age, this new era that we're in. Also, make sure that you've got the right insurance in terms of IR35. So you can look at, I think it's Knightsbridge. I may have a link below that you can check out. You want to make sure that you're compliant and things are just clean in terms of your record. Okay. If you are working inside of IR35, you want to make sure that the umbrella company you're working for is squeaky clean. They are tracking down on umbrella companies because they want to make sure that they're not avoiding any tax. So at the very least, I think it's very important to make sure that you are with an accredited, okay, or qualified or whatever it may be, umbrella company such as FCSA. I forgot what that stands for. I think it's Freelance Consultant Something Approved. Okay, you can check it out for yourself. Make sure you're with an accredited company. Again, I can recommend the company that I use, Sapphire Accounting. So they're pretty good. You can check out the link below for more information as well. So these are all things to consider. Again, I will stress this again and again and again. Don't be cheap. Get a good accountant, okay? Whether you get a high street one, a more official one, whatever it may be, I have learned so much from accountants. And I know you can too. So invest in an accountant that can help you be tax efficient, help you understand how all of this stuff affects you, and you would be more ready moving forward when it comes to any changes within the market. You also want to make sure that you build a strong personal brand. Okay, so this is not just online, the LinkedIns and all this kind of stuff there. This is also making sure that you're connecting with the right people, that you have a great CV, a great portfolio that you've put together. Of course, you want your LinkedIn to be on point. Make sure that you're evidencing your competencies, because confidence comes from your competence. Be clear about all of this stuff. You know, I have something known as the PAR model. What problem are you solving? And what actions did you take, and what tangible results or benefits did you contribute towards this specific problem that you're solving from a strategic and or operational standpoint? So bear all of this stuff in mind. Hopefully this makes sense and this is clear for you. So when we summarize all this stuff, again, I'm not going to go through all of this. You can take a screenshot or whatever it may be. This is everything that's going up. There's a lot of things that are going up because the government wants to make more money. They want to raise £40 billion. Of course, they have, you know, plans for growth and all this kind of stuff there, blah, blah, blah. But plans change. Everyone has a plan until they get punched in the face, as Mike Tyson once said. So these are all the things that are going up. Again, these are all of the things that are specifically going down and remaining the same. So again, I think you're a winner if you're outside of IR35 and you're an individual who is getting paid via dividends. I think that is the best setup for you as a person. So let's wrap this up. Let's definitely connect. If you want to connect with me, you can connect with me on LinkedIn, obviously YouTube, TikTok, and all these different stuff there. And if you want a competitive edge as a business leader in today's current climate, and you want to diversify your portfolio career, then complete the form below for more information. And again, if you want to see more videos centered around portfolio careers, leadership, contracting, consulting, all this different stuff that's going to be useful moving forward, then don't forget to like and subscribe. And as always, understand, reach, and expand. Peace.